Hello, and thank you for joining us at XM.com for this special report. We'll be examining how the pandemic made China stronger. I'm Cristina Marujos, and joining me today is Cristina Bartenido, investment analyst. Now, Cristina, China has been stigmatized as the country of origin of the pandemic that is sweeping the world, but it appears, at least from a political perspective, that it gave the country certain advantages. Also, the latest economic data signal that China closed 2020 on a high note, with future economic projections being equally optimistic. Why is that, especially in an environment where the recovery in the rest of the world still seems to be hanging in the balance?
Hi, Christina. Indeed, it seems that China has found itself on the positive side, or at least not on the negative side of the coronavirus story. Well, if we go back to the start of 2020, there was a violent demonstration in Hong Kong streets where the virus was not even known because of the national security law the Chinese ruling Communist Party decided to implement in the region to punish protesters and reduce the city's autonomy. So that caused the anger of the people and also raised international opposition. And Xi Jinping's political popularity was in danger back then until COVID-19 was discovered. And because of that, the government managed to take back control of the area by locking the streets and forcing people to self-isolation for months, even without providing compensation for that. And the best part of the story is that a year after the spread of the virus, the government managed to turn all this political anger to national pride and respect because of its successful response to the health crisis. Well, of course, the virus spread is not fully contained in China, but new infections are surprisingly significantly lower than in the US and Europe, and that has also a positive economic impact because businesses and consumers face softer restrictions, and consequently that is supporting industrial production and retail sales more than in the US and Europe. Of course, international consumption, which is currently subdued because of the stricter lockdown measures, the rest of the world is important for Chinese exports, but since China depends more on manufactured good exports than tourism services, that's an economic advantage for the country. Besides, according to the IMF projections, China is expected to post another positive growth in the fourth quarter of 2020 and post a much larger expansion of around 8% in 2021 than the US. So that is expected to attract market interest. Perhaps its bond market will be a source of demand for the yuan, given that Chinese bond yields are comfortably above the ones in the US and Europe. The stock market had also a constructive year in 2020, so perhaps China is currently looking to be one of those growing places where investors would like to place their funds.
Of course, it's important to note that not all is bright and good, as the pandemic is still in full swing. So what kind of challenges might China's economy face moving into 2021?
Well, the outlook is currently looking promising for China, but we shouldn't forget that private debt levels remain quite elevated. And to mitigate these risks, the economy should keep growing. The trade war with the US is another problem, and likely the election of Joe Biden will not stop that, especially as China's tech sector seems to be threatening the US and European market shares, and the Chinese government is adopting more aggressive external policies. Biden has already warned that it will seek international cooperation to punish China's trade practices, but this might be a tough call since Europe and several Asian countries have already individually negotiated trade agreements with China.
And finally, since Australia is China's biggest trading partner, how can the Aussie be affected by all this?
Well, as long as the virus remains the main topic in the market and China performs much better on this front compared to the rest of the world, then I think that this might keep some footing under the Aussie. Besides, trade tensions with Australia didn't really affect the currency so far, and if the news out of China remain encouraging, then the Aussie might see more improvement. However, from a technical perspective, if we look at Aussie dollar, then the market looks overbought in the weekly chart after an 8-week rally, so downside corrections in the near term cannot be ruled out.
Cristina, thank you so much for joining me today. This was a special report. Thanks for watching at XM.com.